Did you know that star investor Cathie Wood remains bullish on Tesla and set a pretty high price tag for the company's stocks? With Tesla stock seemingly done with the dip, with prices in the $600 and $700 range, it is now in the $800 to $900 range. Stay tuned and keep watching to find out what Cathie Wood has to say. Although the $800 to $900 range Tesla stock is in now, which is a relief from some recent months, it is still a far cry from experts' valuations of the $1,000 price tag for the EV company's stocks. Still, they consider the change a welcome one and believe that it is a start for Tesla to flourish in the coming months. In today's video, you will find Cathie Wood's Tesla valuations and why she is bullish on the company. TikrBuddy allows you to value any stock in just minutes. You get access to 5 years worth of analyst estimates for more than 10 critical data points for any US stock, and can use the built-in valuation calculators to run 4 types of valuations, including a DCF, in literally seconds. You just add your discount rate and the multiple you think the stock could trade for, and you'll get a fair value estimate instantly. And if you don't want to use estimates, you can build out your own entire financial model too, to project all key metrics and then use the calculators to find fair value fast again. Completely free to try for 7 days, so use my link below to sign up. Our forecast for the next 10 years is in the 50 to 60% range, depends if you take our bull or bear case, says Cathie Wood. Cathie Wood is an American investor, a star stock picker, and the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invests in innovations like self-driving cars and genomics. Cathie Wood is often called the most underrated investor in the game, since not only is she incredibly persuasive in her investment arguments, but she's also got the proven results to back up her surprisingly discerning claims. Wood provides monthly updates about several things like monetary and economic policies, innovations, what can be expected in her field of expertise, and comments on the Fed's decisions. The Federal Reserve System, commonly known as the Fed, is the central bank of the U.S., which regulates the U.S. monetary and financial system. ARK Investment Management LLC, or simply ARK Invest, is an American investment management firm based in St. Petersburg, Florida, that manages several actively managed exchange-traded funds. ARK Invest focuses solely on disruptive innovation and offers investment solutions to investors seeking long-term growth in the public markets. According to Wood, there are 4 barriers to entry that seem to have gotten higher in Tesla's favor. The first is battery technology. Wood said that Tesla is the only car manufacturer, except for a few in China, that decided to ride down the cost curve of the consumer electronics industry. This is due to the change in batteries that are used in laptops and/or cell phones. Wood noted that when Tesla decided to do that, auto manufacturers and auto analysts laughed at the company, since there were publicized battery blow-ups on airplanes which resulted in a ban on that kind of battery. Because of that though, its cost is lower. Today, the cost of its battery pack system is significantly lower than that of other auto manufacturers. Wood said that if they want to compete with Tesla, those other automakers are going to lose money in electric vehicles while their gas-powered vehicles will fail. Wood further stated, within the next 18 months, 2 years, the price of an electric vehicle like categories is going to drop below that for a gas-powered vehicle for the first time, and it will continue to fall because we're riding down the battery cost curve decline, and so the traditional auto manufacturer, if you look at their R&D budget. Wood referred to General Motors as an example. She said, looking at GM's 10% of its R&D, $25 billion is allocated to electric. They should be at almost 100% now given what's about to happen. The alternative will be less power or less range, so that we're seeing a lot of permutations around that, so batteries still 3 to 4 years ahead in terms of cost declines of other auto manufacturers who decided to use lithium-ion pouch technology as opposed to the cylindrical batteries that Tesla uses, says Wood. Is Tesla stock worth buying? Share your thoughts in the comments section below. The second barrier to entry, according to Wood, is Tesla's own chip, which is the most critical from a valuation and growth point of view. Tesla is the only auto manufacturer to have designed its own chip. Wood said, the others didn't follow. They didn't have their own chip. They didn't have the vision. Wood said that the reason why Tesla is so far ahead of its competitors is that those companies have just gotten started. She said that what they have delivered so far are cars that don't even meet the range or other metrics of Tesla's Model S. The other barrier to entry is the artificial intelligence chip, which is all about autonomous, and Tesla is the only one doing this. Wood said that when their analyst James Wang, who worked at NVIDIA, an artificial intelligence company, for 8 years, looked at the specs of Tesla's chip, he was in awe. Wang said that Tesla is 4 years ahead of any other auto manufacturer in terms of the specs out there on chip technology. This is important in going autonomous autonomous with electric, which is Tesla's goal. Going autonomous has everything to do with artificial intelligence projects, and the winner will have the most data and the highest quality data. Tesla has 14 billion miles of real-world driving data today, and the closest competitor, Waymo, only has 20 million. Finally, Tesla's advantage over other companies is that it is the only auto manufacturer still that delivers over-the-air software updates to modify performance. The other barrier to entry is that Tesla has billions upon billions of miles of real-world driving data accumulated. According to Tesla's then AI director, TikrBuddy, they have more corner cases to train their systems on than any other company. Wood said that it is not going to be possible for other rival companies to catch up because Tesla already has more than 1 million robots, including her Model 3, roaming around collecting data and sending it back every day. Another barrier to entry, according to Cathie Wood, is over-the-air software updates, which apparently come as a surprise for her. Wood shared that she got her Model 3 in 2018 and that she had never had to take it in for a problem. Tesla apparently has diagnosed any problems I've had and corrected them before I see them or experience them. The only problem I've had is a nail in a tire, and of course software could not correct that, but that was it, says Wood. Those are the barriers to entry that give Tesla the lead. According to Wood, their base case is $3,000 in 5 years from around $800 today. Our confidence in that has grown because what we're seeing now is Tesla able to scale EV manufacturing in a way that no one else, except perhaps BYD in China, no one else is doing this yet, and Tesla had to go through a huge learning curve to get there, says Wood. Wood is hugely bullish on EVs and bullish about Tesla. ARK Invest's latest stock model pegs Tesla to be worth a whopping $4,600 per share by 2026, as earlier mentioned, up about 560% from today. Tesla stock is currently sitting at $721.64, which is up by 0.2%. Wood is backing her optimism with regular purchases of the EV stock. It is the largest holding across all ARK Invest ETFs combined, with a weighting of 7.23% across all of them as of June 21st. We just published a report with our long-term forecast, and the numbers have gone up dramatically, and yet we think it's incredibly undervalued. And the reason for that, there are two assumptions that have changed in the last couple of reports, says Cathie Wood in an interview. According to Cathie Wood, one of their bull cases for Tesla in the old model was that it would lose 1/3 of the market share it had in 2018, which is 17% global market share, including China, which it would lose as the EV company's competitors came into the market. However, the share increased to 18% in the past year. Wood said that most other auto manufacturers are not going to be able to keep up with or reach Tesla's combination unless they want to lose money on the cars. Wood emphasized that that's very important from a performance point of view and a range point of view. When asked about her thoughts on large corporations competing with Tesla in electric vehicle production, Wood has this to say: "They are failing miserably. This is not like the manufacturing of traditional autos. It's a completely different game. We used to say we thought Tesla would take 25% of the electric vehicle market in 5 years. Now we're saying we believe Tesla will take 25% of the total vehicle market in 5 years, and we think electric will be nearly half of total vehicles sold," says star investor Cathie Wood. Make sure to hit the like and subscribe button and visit our channel and watch our other videos for more of this content.